Good morning, this is Barry Wilkey with Major League Trading. Could I get a sound check here? Can everyone hear me all right? All right, thanks a lot. All right, so let's go ahead and I didn't put in the overnight action here. We'll look at that in a minute, but it is on the bearish side. Just forgot to update that on the level sheet. So still pretty far away from a rate cut, but there is a quarter point priced in again on October 30th at 56% chance. There's really no news today. At 9 a.m. and 12 minutes, we're going to have President Draghi speaking. He is the Jerome Powell to the ECB, so we'll see what he has to say. Then we have PMI, flash PMI at 9:45. We have two different FOMC speakers speaking today, but it's not on the FOMC calendar. It's just on the Forex factory calendar. So I don't think whatever they're saying is all that important, but we should note that the mouthpieces will be there anyways. Looking down at the action, I did want to notice that in the last 5 days, if you look at what's going on, we are a little bit of a tight range, right? A 2% range in the last 5 days, although it seems like it's been more than that to us. And this is just for closes, not high to low for those 5 days. But as we can see, we resolved a little bit lower on the 10-day. The Russell has really outperformed everyone, but they've all kind of meandered, sideways here. Even in the 10 days, if you look at the triplets, everyone but the Russell, they're within basically 2.5% of a move. You go out to the 15-day, they're still pretty close. 20-day, not a whole lot going on. 60-day, you get what I'm laying down here. There's not a lot going on. What we're doing is we're just consolidating in this area that we've been in pretty much since April. We got back up high around August 1st, set some lows that were right around June lows. We matched those again in the end of August and kind of just trailed around there. And if you look at where we are, it's still a healthy year so far. So looking back at Friday's action, and I had marked the FOMC spike high from the 2 p.m. release on Wednesday as a support and resistance line. So we fell through that on Friday's session and really was breakaway, to the downside, right? We lost value very low and just continued down. If we look at all the indexes, the Russell was a little bit stronger, but it was still, resolved to the downside. But the triplets were just a mess, right? And as we look at the initial bond study, you can see how far the triplets fell from grace here. Looking at the bell-to-bell fibs and the internals, and you can see that right around 5 or 10 after 1, it's really when the market fell down, and they just held that halfway back short. Never really went back down into target, so we should keep in mind that the targets for that halfway back short from Friday's session are 29.77 half. And for the ES, for the Nasdaq, it's going to be 77, 79, 75. So you might as well remember 77.80 there for that one. We'll get into these longer term charts in just a second. Looking at the Dow, minus 160, close to close, minus 203, open to close. Really no strong stock. J&J was the strongest as far as the range and where it closed in for the day. At closing at 80%, it was up 154 on $131 stock. So it was up 10 Dow points. That was your winner for the day. Looking at the distributions for the ES and the Nasdaq from Friday. So we had that pretty much a mini double distribution and the liquidation break. So really right around 3007 is going to be your line to the top side. And for the Nasdaq, that's going to be right around 79.24. So looking at the overnight session, 26.25 points. You can see kind of a gap up from where we closed on Friday, come up into that resistance that we're watching from 3005, that spike high from Wednesday, come back down, and really just not able to hold value, just sitting in here. If we look at all the indexes, and we'll expand this so we can see all of Friday's range. So we got Friday's high, these red dash lines up here, Friday's low, these green dash lines here. So the Dow is already below it. The ES has traded below it, but back above it temporarily. And these purple lines are the settlement. So the NASDAQ is close to unchanged, right? Sitting right at a plus or minus a quarter point right now. All the rest of them are down at least slightly so far this morning. If we look at any of the overnight trends, and again, this is still up from Friday. So what we have here on the ES, we'll flip-flop this to get it going here. All right. So what we have here on the ES is still that we on? Bear with me a minute. So from the session open last night, as we hit those highs, come back down. Sorry, this is the bull check up in this area. We're still holding loosely coming out of these lows, but I wouldn't put too much weight in it so far. So below 29.85.75 kind of breaks this little uptrend that it's in. And then for the bears, if you look at how much cleaner their draws look, really at 29.92 is the 38.2, at 95 quarter is the halfway back, and at 98 quarter is the line in the sand. So this targets right around that 29.76 level for completion on this. If we do the same kind of analysis on the NASDAQ, my computer wants to cooperate here. We can see it's still roughly holding that line in the sand for it. We can zoom in on the chart up here. But 29.85.75 is that level for it. And then coming back down, it's holding this 78.46 level itself. And then that targets down to 77.94 quarter. Looking at the longer term charts in the picture here, I'm going to actually go back to where we were here. So we had this breakout, right? We could still end up coming down, in my opinion, and testing somewhere close to 29.50, because this is the area that we were breaking out from. We had these 29.86s, that's what we're testing right now. If those don't hold, I think that we're going to end up with this range from this grouping back here. And I think when this box trades, right now we're at the top of this box, really for where the distribution was in here. I think we're going to hit the lower end of it, and then we'll see if 77 to 85 to 86 ends up being resistance above. But I think we're going to go down here and test this week. We are at this is a support area right around 86, so of course it needs to crack first. But I think that's really where we're heading. And we have lost the FOMC. I'm going to zoom into last week real quick, and we'll look at that. And you can do this for the rest of the charts as well. But right here, this area here is really what you want to watch. So from when the FOMC news broke until the low, and just drag that over sideways, this is really the area that you want to see if it can hold or not. So that's going to go down right to around 29.81 basically. And this is the area that we're back in. This is when the news first broke from Wednesday. So we were a little bit above. Now we're back inside. I think we're going to hit these lower distributions, but we should be pay attention, and you can do this for all the charts. Like we marked the spike high, you should mark the low from Wednesday as an important key level on all the indexes this week. See if we end up holding below those or if we don't. So if we look at the Nasdaq as well, so obviously if that negates all the FOMC news, and here's the picture for it. So from 78.91 down to 78.15, basically 14, right in there. You can see we've already traded below it once in the overnight session, come back up, hit the peak of this node on the retracement, come back down. We did have some support down here from 77.88 to 77.98 on the Nasdaq. So we'll see if that ends up coming into play. But watch this spike low and see if we end up, or Wednesday's low of the day. That's going to be an important low going forward for the rest of the week. And I think the Nasdaq could really give us the key where the market's heading so far. We'll look at gold and crude real quick. So crude, come back down. I'm going to see if I can adjust this chart a little bit. So this was the spike high that we had last week on the oil refinery drone strike. So we come back up here, we come back down, we hit this area that we were wanting to hit just above 57.46 for support, but we really didn't get much of a bounce out of it. We went up to 59.46. We're just kind of lollygagging right around in this area. So I think now if we can't, cross back above the 59.46s, I'd be paying more attention to sequences down, and I think we're going to end up either this week or early next week back towards these 56.23s if we can't get anything going here in the next few days. Looking at gold, and gold is with the indexes coming back down, the ECB's printing money, gold is starting to get a little bit of a bid again, and it's the same thing. You can watch that same spike range for gold, right? This is the high from Wednesday, which was on the FOMC news, was 15.1940, and we don't really need to worry about the low, but you should watch it going forward. 14.9080. So you're above this level now. So I would assume that you're going to crack these 15.27s, and at test 15.35, if not 15.4360, sometime this week. I definitely think there's a high, probably an 80% chance that we hit 15.35 sometime this week, and probably a 60 to 65% chance we hit 15.4360. And that's really, we'll have to see what happens after that, or just below it by a point or so, point and a half. So as we look back at the volume for the session, around 250,000 contracts so far have went off. It's nothing to sneeze at there. And if we look at all the indexes, just to wrap it up, remember we have lost that FOMC. We're getting closer to the bottom, so I'm really gonna watch and see. I think we're gonna have I'm gonna use that FOMC range as a do not trade range probably for this week, and I want to really see a break, either a false break below it and get back in and rally up, or just a break and a loss of it to ride a bigger sequence down. But until we break that range for the FOMC, I think it's kind of choppy, and it's going to be a little bit difficult to play. You're going to have some tight stops, and play a little fast and loose, and I really don't feel like doing that on a Monday. So we'll see if we can get actually below those lows from Wednesday and get anything going. But my guess is it'll take at least till tomorrow to start seeing, which side of that we break out of. I think gold is telling you it's going to end up being a break lower because gold's already getting higher. And we'll see if gold ends up falling back in under its spike high. That'll maybe give you an indication that we're going back up. So kind of watch gold as a technical indicator on that FOMC range for the week. I hope this helps. I'll be in Discord on and off today, and I'll talk to you tomorrow.